So I think that is an area we don't have a handle on yet, right? Because how does it affect the aggregate risk, what it means for the broader market? Fortunately for us, we have not really seen volatility go up or go down as proportion of derivatives market has gone up, right? But the fact is that many of these retailers are also writing options, right? So writing option is an open-ended risk.
Yep.
Right. So we don't know what is the amount of risk appetite or solvency they have if something goes wrong.
Right.
Right. And unfortunately, uh, you always have those black swan events, which is when some of the real risk of these markets growing will come to the fore. So one risk, of course, is that probably the fact that you consistently lose 80% of the money will mean that capital market will become a bad experience for scores of people. So younger generation whom you want to come into the capital market for longer term wealth generation, they might become scarred. But what happens to the actual market, the risk in the market, that is currently uncertain, and unfortunately that will come to light only when there's a black swan event.
Right. And so, Ashish, so there is obviously risk to individuals, but is there systemic risk that, let's say many of them get wiped out? Is there some investor on the other hand who's hanging loose, some broker default type stuff happening, or is that covered because of the structure of the market?
Yeah, so I think the structure of market should cover that. The fact that most of these traders have like a 30-minute time in which they are squeezing should cover that. But again, we are in unprecedented, uncharted territory.
Right.
Right. So I think that's why I think the regulator is rightly worried.
Yep.
That's why they had the disclosure being put on what you read at the beginning of it. I think it will be good if we nip it in the bud rather than doing it post the event.